Right on asset management companies, they've been under pressure over the past few months, even as the market sentiment is healthy. So is there a case to look at these stocks as a buying opportunity? My colleagues Sharad as well as Ashesha join in with the bull and the bear case scenario. Ashesha, let me begin with you. Which side of the story are you on?
Well, I'm on the bear side this morning, and let's start off with some of those points then. First up, let's not forget that SEBI has recently issued a consultation paper on the maximum fees that can be charged by these mutual fund houses. Usually, these all asset management companies earn yields anywhere between 2 to 20%, but because of the consultation paper that has been issued by SEBI, Nuvama says that their profitability could be impacted by as much as 27% by FY25. Let's also talk about the intensifying competition in the mutual fund space. We have a whole host of companies that have already received SEBI nod for getting a license, for getting a mutual fund license. Bajaj Finserv, Navitech, Zerodha are some of those companies, and a whole host of companies have also applied for this mutual fund license, which includes the likes of Angel One, PhonePe, Helios Capital, Alchemy Capital Asset Management. Apart from this, let's also talk about some other regulatory changes that have recently come into place. Budget 2023 came up with a whole host of announcements. They proposed changes to the income tax laws pertaining to these mutual funds houses, and Nuvama says that it discourages inflows into debt, gold and international schemes by an estimate of about 10 to 20%. So some regulatory changes which are impacting the mutual fund industry. Moving on to long-term SIP redemptions then, and it continues to be a concern. In fact, 73% of the units in FY23 were redeemed within a period of just 2 years from their inception, and only 3% of the total investments that are done in SIP are redeemed or are kept as investment for a period of over 5 years, and hence SIP redemptions continue to be a concern for the mutual fund industry. Lastly, let's also talk about some other broader bear case scenarios. Front running continues to be an issue for the mutual fund industry. Apart from that, lesser incentives for passive fund management for most of these intermediaries is also a concern.
Well, yes, Ashesha, but let's look at the bull case also, how it actually goes around. And firstly, of course, is the valuations part. Of course, they are actually correcting from their one-year peak valuation. You see, they are still down between 15 to 25 odd percent in the listed space. That means valuations are attractive, what industry experts are stating. But there is also an increased surveillance coming in from SEBI. And of course, all eyes are there on the finfluencers, talk about misleading ads, and also the corporate governance issues which are being faced in certain fund houses. Apart from this, of course, the monthly SIP numbers are still above the 13,000 crore mark if you look at it, and this has been coming for the 7th straight month. That means strong inflows are coming across small cap, mid cap indices and funds for the last 3 months, and it's expected that this will be the 4th month as well, where we'll see strong inflows coming in. Apart from this, also TER changes, relaxation, which are actually pointed out. Over here, there are certain kind of, you could say, a deadline for submission of feedback that has extended, and also the reports are coming in that certain issues of TR which can be actually passed on to the cost to the intermediaries. That means it becomes slightly positive for the AMC companies. But there are certain industry growth triggers also, Ashesha, and that is something which is on a long-term basis we will look at, and this includes the AUM to GDP ratio. That's expected to go up, as well as the mutual fund AUM is expected to go up by more than 21%.